Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, July 10th, 2014. In this video, I'll talk a little bit about the gold and silver mining stocks as well as the metals themselves, gold and silver. As I often state, and as most know, the miners are simply for the most part a leveraged play on the price of gold and silver, with occasional disconnects here or there. But if gold is in an uptrend, most certainly the miners are, and vice versa. Only being that you get much more bang for your buck when trading the miners, especially if you're on the right side of the trade and your timing's good. So that's always been my preference personally, to trade the miners over the metals. Although I will own both at times, especially in long-term accounts. I may own some GLD or SLV. So let's go ahead and dive into the charts, and I'll share my current thinking. As I've stated on the site recently, we've caught just about all the major bottoms in gold and the mining stocks, going all the way back to late June. Became bullish and put out a few names, literally not just the day, but within minutes or an hour or so of the lows, and had some very nice trades on that. We did that again in early January, took profits near the top, and most recently again became bullish on the minings, silver and gold mining stocks, just here in the early June lows. Now, personally, in my trading account at least, I had booked all profits except one small position just recently. A lot of those trades, the individual miners, we had SSRI yesterday hit the final target for a gain of 42%. GPL hit the final target recently for 33%. And a few weeks back, AUQ had a quick, I think it was a 4-session trade for about a 14% gain, and the stock even went on to hit the unofficial next target that I had for about a 25% gain. So personally, in the trading account, I'm a more active trader. I like to, hit and run, get these quick gains. And when the charts become a little bit unclear or ambiguous, or the chances of a consolidation or a pullback are elevated, that's when I like to step aside. And that's exactly what's happened here. We're looking at a daily chart, and this is a 2-year daily chart. But as you can see, for the past several weeks, and as most know, gold and the mining stocks have for the most part, consolidated. They've been moving up, but you can see the quick move was, that was the move I was looking for. That's the move we milked, most of the profits on. And at this point in time, I think this chart remains constructive longer term. I'm just not so sure in the near term. We may get a pullback here, and let me go ahead and make a case for that. And as I often state on the site, longer term traders or investors shouldn't be overly concerned with trying to time and game these, counter trend pullbacks, other than possibly to manage positions. In other words, if you're scaling into gold or the associated mining stocks, and prices are a little overextended, you may want to wait for the next pullback to strategically add to those positions. So let's take a look here. This chart is the daily chart of gold, which is also available on the live charts page, as well as on the home page, the landing page, or right side of the chart. There's a link to this under the box on the right-hand side of the home page, labeled live chart links. What I've added to this just today, and I've pointed this out in the past, the RSI typical 14 setting is one of the most, at least to me, one of the most reliable. It's a very simple but effective indicator in itself. Is it a timing, a method for timing your entries and exits? No, but it gives you an idea. Let's look here. We see the 70 level, this uppermost line, which I know is pretty much obscured by the current reading right now. But this is a 70 level, which is considered overbought on most stocks. The 30 level is considered oversold. And if you just look back in time, simply look at this overbought cluster of readings here, and that's when gold topped back in 2012. It stayed, overbought for quite a while, but the result was one heck of a correction. We did not become overbought again in gold until looks like August of 2013. And of course, if you just follow it up, you look at the peak in gold, and there was a significant top there. Next overbought cluster came here back in earlier this year, in March, early April, somewhere around there. We had several weeks of overbought readings, and that was the last top in gold. And I had mentioned at the time that this breakout was not likely to stick, would likely prove to be a bull trap because gold stocks were, or gold, the metal we're looking at here, was so extended that rarely will you see such a move like this up to a key. This is the primary downtrend line. I had this line listed for quite a while. We had this move off the bottom with very few, or really not any significant periods of consolidation or any decent pullbacks. So that breakout was likely to fail. And if it did stick, at best case scenario, what I would have expected would be a pullback, a back test, and a consolidation right above that level. In other words, dead money for a while would have been, the most likely bullish scenario. But prices did fall back within the trend line, move down, and of course we had that most recent entry here. So I won't rehash all that. These old posts are on the site and it can be referenced. But again, here's where we find ourselves at the fourth overbought reading in the last few years, and that's my concern. Now, we haven't made such a run, so I am open to the possibility that gold continues to work off these overbought readings, and that can go on for weeks, even months, especially if I am correct and we are in the early stages of a new bull market. That is when you expect overbought to stay overbought for long periods of time. So in a bear market, what we have here is, overbought definitely doesn't stay overbought for very long. In a bull market, it can. And, the flip side of that, as far as these gold or really any security becoming oversold, I've highlighted here in the green boxes all the oversold readings. And again, if you take the crosshairs and just look up, each and every time, those oversold readings in themselves were at least short-term buy signals, if not longer-term buy signals, such as the one down here. We had a oversold reading here, oversold here again. So what I use this, I take it in context with everything else, and at the very least, it is a caution sign right now that, hey, let's assume that we're not yet, because we can't declare this a new bull market at this point in time, and we're just not there yet. I think the case has been made for that, but we're going to look at the weekly chart here in a second. But either way, that's just what I wanted to point out. A little bit of caution is in order, and that's my preference right now. Longer-term accounts, I'll leave those positions on. I don't see any reason to sell because the longer-term charts are constructive, but in the near term, you have the MACD curling down here. MACD bearish crossovers usually lead to pullbacks. You can take a look, of course, at the MACD as well. So there's some signs, as well as the divergences that I mentioned on the 60-minute time frame with GDX and the other miners. So let's go ahead and take a look at the weekly chart. Okay, here's the weekly chart of gold. Again, we're looking at spot gold prices. This is available on the live charts page. This is an end-of-day chart, stock charts, meaning they only provide at the close of business each day. Later that day, they update the the spot price of gold. So you're not going to see this change intraday. Either way, we're looking at a weekly chart. That wouldn't matter much. This was the scenario. I've left these lines on. This goes all the way back. These lines were drawn, as were these notes, all the way back in October it was. I think I previously said November, and these were my notes from back then when gold was still well above this trend line. This was the long-term uptrend line that I was focusing on. At that point, we only had potential positive divergence, as I'd drawn here with these blue lines. I expected prices to have a reaction off this long-term uptrend line, and if so, that would put in higher highs on the RSI as well as the MACD down here, or I'm using the PPO on a weekly chart, very similar to the MACD. So that is exactly what happened. We put in positive divergence, and prices, then again, I pointed out recently back on June 2nd, gold made another kiss or test of this trend line. Now, the fact that we've had these two reactions off the trend line, because we hadn't had some in quite a while. That trend line was originally generated going all the way back here to the late 2001 lows. So the fact that we had these two tags and reactions gives that trend line validity. Now, it's still something to watch. As I said, we're not clearly out of the woods on gold yet. And I will share this. We're looking at a trend line, again, that's, what is that, over 12, almost 13 years old. That's the bull market in gold is pretty long in the tooth. We got quite a bit away from that trend line. It was a strong bull market, and we've had these two tags. So let's watch this. If and when this trend line happens to break, if prices go below there, I will have some concerns, obviously, and my longer-term outlook may change. But for the time being, I put a lot of stock into positive divergences, especially on the weekly time frame, and I do think these can play out in the coming weeks to months, possibly a year or longer here. So let's just take it as it comes. Now, real quick, let's talk about overbought, oversold again. Here's a good example. This is the RSI 14 on a weekly time frame here. And if you notice, look how the RSI pretty much stayed up in overbought territory, or at least above the 50 level most of the time. In fact, we don't even have a single oversold reading, oversold being a reading of 30 or less, until the bear market in gold was well underway. By bear market, I mean this was the peak back here. This is a cyclical bear market from this point down to here within a longer secular bull market. So just want to make that distinction. So again, overbought can stay overbought in a bull market. So when you have the RSI alone, that's not a reason to sell. And right now, in a way, I'm contradicting what I just pointed out on the daily chart. I have those concerns about the overbought readings right now. However, we're not even close to being overbought on the weekly time frame. There's still a lot of room to go on the RSI. So from a longer-term perspective, gold is anything but overbought. In fact, we're just coming off very deeply oversold levels, and that is a heck of a buy signal in itself that may take months to play out. So mixed signals, yes, and that is why I'm not short gold. For those of you who have followed the site for a while, you know me, I love to go long a security, a stock, an index, a sector, milk the gains, and even within a longer term trend, I'll turn around and reverse that trade, as I did several times in the last year with GDX, making some really nice gains on the miners, and then turning around after I close those positions and taking a quick counter trend short, and then either getting back in or getting into cash. But however, right now I have absolutely no desire. And one of the reasons there is, again, because I believe there's a possibility we may be in the beginning stages of a new cyclical bull market. And if that is the case, then the pullbacks are going to get bought up rather quickly. And so I'm just watching for now. But either way, wanted to point out the fact that we are oversold on the daily chart, as I pointed out. That is a caution, a red flag. But not quite, or not even close to being overbought. I should say overbought on the weekly time frame. Okay, now let's take a look at GDX, the gold miners ETF. We're starting out here with a 60-minute chart, and as I've mentioned recently, I've been mentioning for a few days, we have divergences building in the GDX. In fact, I've been mentioning those divergences since they were down here. Yes, prices have moved higher since I started pointing that out at this point here. However, that doesn't change the things. That divergence there was burned through. However, let's go back here. Now we have, and you can see here that the MACD is starting to curl down. So once we get the actual crossover, the bearish crossover, this larger divergence will be confirmed. So what I'm talking about here, prices from this point, if you look at the RSI and the MACD where they peaked out, are now making a lower peak, lower highs, against prices making higher highs. That is the definition of negative divergence. And so shorter term, we're looking at a 60-minute time frame here, but we have these shorter term divergences, bearish divergences, possible wedge. I've made a few redraws here. And this is a trend line. I'll talk about this one on the daily chart here in a minute. I really think there's a good shot that if we do get a pullback, and I do think we will get one. I'm not that confident. I'm not confident enough to short it, But this would be a heck of a nice pullback area. This line here, let's color that in. We'll make that red, orange, whatever that color is. You have this horizontal support here. You had a failure here, and that comes in around there. So I could easily see. Let's see if I can draw this out. Give me 1 minute here. You know, a pullback to that area would make a lot of sense because it would be this potential uptrend line here. I have a few reaction points. Prices have gotten ahead of themselves quite a bit. We're overbought in the near term on the 60-minute charts. We're overbought on the daily chart. We have negative divergence here on the 60-minute chart. So I would like to see nothing more than a pullback to somewhere around these intersecting levels, the horizontal support or this uptrend line. And that's about roughly 25, 30, somewhere in there. And that, again, is the 60-minute chart at GDX. Okay, this is a daily chart, daily time frame of GDX. This is the same, this should be the same wedge I had just shown you on the 60-minute chart. And then that next uptrend line, which will probably come into play at some point. You can't have prices sustain such a steep move forever. You know, typically strong uptrends, they start out very strong. They'll come down to a lower trend line and then a lower. I'm referring to the slope of the trend line. So at some point, I would expect to move back here. Now, I had labeled this. If I'm not mistaken, I had posted this chart in the last few weeks with these levels here. At least I had them on my chart here. I'm not sure if I put these up on the site. R2, meaning resistance 2, R3, T3, third resistance level. And what I'm looking at here is this previous reaction high in GDX from back in March, as well as some reactions around this time here. We had a reaction high, another reaction high. So most importantly is that most recent reaction high. You see this extended, very extended move in the mining stocks. And we're looking down here at the RSI, the daily time frame, as I just mentioned, overbought. And again, let's go back. Let's look at every time prices became overbought. We had, an extended period of overbought prices here, and finally that resulted in, quite the correction. Looks like we tagged this 70 level right about here, and when prices were up here, and as you can see, these are pretty hefty corrections. Again, overbought. This was extended. We were overbought for weeks at this point in time, and that resulted in, that was really pretty much the beginning of the bear market in GDX. Once again, this span from this point to at least this point, that is a bear market in GDX. So overbought at that point is a great time to short when you're in a bear market. However, we look down here, oversold readings. You had the first tag, you had an oversold reading here, the first tag here. Oversold can stay oversold for a longer period of time in bear markets. And of course, it's still yet to be determined. I think it's pretty safe to say once we take out this R3, T3 level, that we are in a new bull market in the gold mining stocks. I happen to believe I made the case, that we probably begin a new bull market back here. And I think certainly once this R2 level is cleared, with conviction, that will greatly strengthen the case. A trend, by definition, you have uptrends and downtrend. An uptrend is simply a series of higher highs and higher lows. So what do we have here? We have a reaction low, another reaction low. We have a reaction high. So if we take out that high now, make a new high, well, that is clearly in the beginning of, we're in a solidly within at least what I would call an intermediate term uptrend. And there's no doubt we're in a short-term uptrend right now. But again, we're at resistance, overbought, and therefore that's my reasoning for being cautious and in my trading account booking profits on my mining stocks and just giving a little time here to see what happens. Okay, in a nutshell, that's what I wanted to cover on gold and the mining stocks. This video's gone about 19 minutes so far. So I don't have a lot more to add. What I'll do from here, for anybody interested, I'll go through just some of the largest holdings in GDX real quick, take a look at those charts, and make another case for a potential pullback here in the gold stocks and why I'm being cautious. So feel free to turn this video off, or you can watch a few of these individual charts. This is the GDX, the gold mining ETF. These are all the holdings, and what I did is I ranked these. I sorted these by market capitalization. So you have GG, the largest company with a $23 billion market cap, ABX, Barrick Gold below that. So let's just run through. I'm only going to go through about the top half dozen or so. And let's see if I have some annotations on these charts. I'm sort of ad-libbing this. Okay, here we go. Goldcorp, the largest, at least the largest by market cap within the gold mining sector. Just like the gold stocks themselves, as one would expect, the heavier the weighting, the more influence it'll have on the ETF itself. So just like GDX, we're at that previous reaction high, which is a pretty formidable resistance level, especially considering how extended. Just like GDX, we're overbought here on the daily time frame. Possible bearish crossover on the MACD here. That could end up being a whipsaw. We have this large gap back here. So again, my concern is overbought at resistance. That is my cue, at the very least, not to be chasing gold stocks here. Whether you want to hold on to what you have, put stops in place. Again, if you're a longer-term investor or trader, don't worry about it. But as a short-term trader, at least for part of my accounts, that's my plan. ABX, next one up, Barrick Gold. I mean, nice base here. You look at between this line and this line here. This stock has been basing now for, going on over a year. We do have a reaction high here. Big gap back here, if you can see where the cursor is. And that's where prices are right now, challenging. And if you look closely, we're sort of putting in almost like a hanging man candlestick there. So, if Barrick can clear that level, this is the next key resistance level right here, a very important level because that's the top of this long-term base. So ultimately, over time, I do expect a breakout. And if and when that happens, I'm looking at an upside target on Barrick of well into the lower to mid 30s. These lines aren't official yet; they're just from previous drawings. But that's ABX. Here's Newmont, another big name. Same story, nice basing pattern. This horizontal line right here, I'll color this. That is a key level to watch. We've had 1, 2, nearly 3 taps up against that line. If you look back here, this line, price level used to act as support. Former support, once broken, becomes resistance. And, again, I ultimately expect an upside break. However, we're up against resistance while being overbought. So same story, a little caution is due. And I would rather miss out on a little bit of a move and just see a clean, solid breakout. Maybe, let's say prices do continue to run. I keep talking about how overbought they are. Let's say we get a breakout and it happens from here. Prices keep going up. I would imagine at some point we'll be so overextended that there's a good chance prices will come back to backtest this, which will now then be a support level, and that's where I'd look to make a longer-term trade, enter a longer-term trade on Newmont. But I have no desire, going long at resistance while a stock is just under resistance is really contrary to trading. As a trader, you should go long on a breakout above resistance, or you short resistance looking for a pullback. SLW, nice looking chart. Here's a downtrend line we've taken out, and you look at the impulsive action. Now there's a case. Here's what I would talk about. This was a very extended run. I mean, not even a single pullback. Look at all these green candlesticks, and then boom. This is a silver stock. Silver stocks, by the way, have been extraordinarily strong, and as some of you know, I didn't have a lot of names on there recently, but the ones I did, the individual names were a lot of silver stocks, and I was focusing on the SIL, the silver ETF, recently as well. I had a very nice trade on that. So the silver stocks have been on fire, and this is a case of how overbought, stayed overbought, and this breakout just kept going right on through. However, yes, we overshot. I should have a line here. I'll add that, because that was a significant resistance level. You had this reaction high and this reaction high. Prices punched through. But what I'm afraid of now, and I talked about it on my most recent static post on the site today, a bull trap. Seeing a lot of the recent breakouts from the recent trading ranges in GDX, GLD, SLV, the GDXJ, all those recently broke above those trading ranges. They were sort of flaggish. GDXJ had a true bull flag shape, and bull flags typically angle downwards. But either way, it's the essence of a strong move up, a period of consolidation, which is usually continuation pattern, and then a breakout to the upside. And I can assure you there are a lot of traders, a lot of eyes viewing things that way. And I'm concerned more about a false breakout. I've traded these gold stocks for years, and they can be tricky little buggers at times. They'll give you those false signals. And if it does prove to be a bull trap, meaning a false breakout, the downside reaction is usually pretty quick and violent. So just be careful. And that's what I'm talking about here on SLW. We see this breakout today. Let's look at a 1 minute chart. Here is the breakout, and look at that. It's been shot down, and now prices are back below that level. They're below yesterday's close. This yellow line is yesterday's closing value. These are the highs yesterday. So far, a failed breakout in SLW, one of the biggest holdings. And here's another one. This is the 5th largest, at least by market cap. I'm not looking at the rankings. The market cap is usually in line with what the holdings are, or the weighting that each ETF has. This is Franco-Nevada Corp, FNV. You talk about a formidable resistance level. We've had this strong move up to this previous reaction high back from 2012, and the stock is, challenging that level now, while extremely overbought. So I could go through these, and basically it'll be the same theme: overbought at resistance, and so I'm at this point just sitting back. And ideally, I'd like to see a pullback in the mining stocks, and I will communicate that when I see it, as I have. I've already given some pullback targets. And again, as a trader, sometimes you don't get what you're looking for. So if these stocks happen to power on through, and I have to buy in it back at a higher level, that I'll do. As I mentioned, a back test of some of these support levels would be the ideal entry point. I wouldn't want to, if these stocks move up another 3, 4, 5, 6, 10% in the next week or so, I wouldn't want to buy in right there. I'd wait for the next pullback to support, hopefully to come back and back test those resistance levels. Okay, folks, hopefully that has been helpful. And this has been Randy Finney with the Right Side of the Chart. Have a great day.